Well, yes, the bear market dominoes are falling. Now, we're not in a bear market yet, but we're starting to see some early signs. Seasonals remain bullish, but gold is skyrocketing right now, and we're starting to see some of the weaker stocks break to new lows. Hey, everybody, Courtney Smith here for our Wall Street winners. For August the 3rd. Looking forward, we've been doing so great lately. Let's see if we can keep it up for another week. And of course, this will be up every single time I do this thing. Okay, S&P, nice Friday. Purple predictor, starting to move higher. Those are good signs. But really, what kind of a bull market is this? Not much of one. Dow Jones actually selling off more than the S&P, and you can see the little red line is above the green line, showing that there's more selling pressure in the market than buying pressure. The NASDAQ, though, almost broke to new all-time highs. I thought for a while there that we had shifted into Dow-type stocks, but we're right back into NASDAQ-type stocks, mainly because 4 of the 5 biggest mega-cap tech stocks reported blowout earnings in the middle of the week. And that really got people all excited about tech stocks all over again. So that's where the action is. That's where we need to be. Seasonality, I got to call it neutral for the stock market. Utilities are getting close to a buy signal, but remain neutral at this point. However, if we look at what Stock Traders Almanac says, they say this week could be a little bit of a bullish week, so that'll be nice. Yield curve drifting lower. This is actually not good. The Fed is guiding this. They're completely manipulating the yield curve right now, and they're guiding it to lower levels. It's not at a point where, it's certainly not to the point where it should trigger a big bull market, but it's also not to the point where it should trigger a new bear market. It's kind of Asset allocation also no change here. Stock market risk indicator, they're not doing anything here either. Boring. However, this is one of the dominoes. Look at what's happening to global shares, okay? These are all the big stock markets around the world, excluding China. That's the only big one that's not here. But you can see that the market is dropped pretty precipitously and broke some micro lows here. So that's a bear market sign. If the rest of the world's going down, hard for the U.S. to keep going up. Bonds, on the other hand, grinding higher. We've focused on the purple predictor now for a couple or 3 months. In addition, as I say, the Fed is guiding long-term interest rates lower. So if the Fed says long-term interest rates are going to go lower, who am I to argue with Jump and Jerome Powell? I can't. Bond key factors, though, are telling us that we should have higher interest rates, but the Fed is saying we want lower. Guess who wins that battle in the short run? The Fed. Over the long run, the Fed can't overcome the market. But over the short run, over months after months after months, they can control the interest rates completely against what the market wants. Dollar got a big rally on Friday, but that's after almost every single day for the last 3 weeks being a down day. And if the dollar is down hard, what does that mean for gold? Yeah, you got it. Gold is up strong. So one of the intriguing things to me was here on the dollar, we had that very strong up move in the dollar on Friday. Kind of gold continued to move higher. It didn't close on the highs. It closed in the middle of the day, but it didn't close anywhere near down. That's a sign of strength. That's a sign of strength. Here we see our top indicator is definitely bullish. The middle one is microscopically bullish. Now the bottom one, I'm going to count as, it's got the red arrow pointing down, but that's only because it was down for 1 day. I'm going to say it's actually bullish. Crude oil came under some pressure as well on Thursday, but rebounded slightly on Friday. I'm just thinking it's going to stay right in here. Now, I haven't been in tune with this market for a couple of months. After calling it perfectly for month after month and making some pretty dramatic calls, I'm just going to sit here on the sidelines and be bored by this. Now, I told you I didn't want to be short anymore. I'm not short. I wasn't going to be bearish anymore, but I really didn't say I was going to be bullish. But now the situation in Bitcoin is bullish. we broke out of the 55-day high, and the purple predictor skyrocketed. So I would want to be long at these levels right now with a stop maybe down around 9,500. That's a pretty wide stop, but that would make the most sense. You could, if you wanted to, put a stop up around 10,100, something like that. But I don't have a position right now, but I'm thinking of getting in on Monday on the long side of Bitcoin. All right, we still looking for a bear market, and I don't think it's this week. We do have some of the dominoes starting to fall in place. I gave a webinar, a live webinar a couple weeks ago. You can watch the replay. Just send an email to support@wealthbuilderllc.com, and Cherie will hook you up with that. It's free. All right, freebies. That's what we got for you right now. Hold the course, stay long, but be nervous. Okay, fully paid up members, hang on just 1 second.